Welcome to another episode of the Grbcic Duo podcast. Today it's just again myself, Adam Grbcic, and I've invited Jake onto the podcast. Jake is the National Sales Manager of Ready Media Group. How that's relevant for us in the real estate industry is we utilise two key portals in commercial real estate, being Development Ready and Commercial Ready, both two of our major platforms. But I've got a little bit of a summary of Ready Media Group, which I'll read out before I introduce Jake. So founded in 2015, Ready Media Group is a media, technology and data business that focuses within the commercial property market across two key segments, development sites and commercial investments. The foundation of Development Ready, their online platform, launched in 2015. It disrupted the digital property market and provided a unique alternative for real estate agencies to exclusively target investors and developers. Reflecting on their growth, their growing database of property investors and developers, Development Ready and Commercial Ready have increasingly become two powerful, high-quality lead-generating portals. Fast forward to today, Development Ready is proudly Australia's only dedicated development site portal, I should say, led by the most experienced commercial real estate account management team in the industry. So, Jake, welcome to the podcast.
Thanks, Adam.
It's
Thanks
good
for
to have
having
you here. And it's I thought today would be interesting because you see the back end of the real estate market. You
Certainly
see
do.
what's happening in terms of trends, statistics, and I thought it'd be interesting to see what sort of trends we're seeing, mainly in the development site market, but in the commercial market as well. So that's enough of me rambling, Jake. Maybe a bit of an introduction on yourself because you've had quite a long history in the real estate industry.
Yeah, certainly have. So been in the industry here in Queensland in the commercial industry from 2010, working for Real Commercial initially for about 10 years, and then from 2020 till today with Ready Media Group. You mentioned a little bit about how the whole business started. It's actually started by solving a problem. So Will Pickering and Nick Materia, our two founders, were actually developers in Melbourne, and they were trying to sell a DA-approved site in St Kilda. But what they found through this process is that the inquiry that they were getting was not the right quality, and also the cost to get that inquiry was actually quite high from the traditional portals. So they've reached out to another couple of friends that they had in the development industry in Melbourne, and they found out that this was actually a common theme and a common issue. So that's how Development Ready was born. It was actually initially Pyramid Ready, and then we rebranded to Development Ready further down the track. So I suppose our point of difference to the mass market portal is that specialization. So we're able to specialize and only focus on development sites and commercial tenanted investments, giving a tailored experience, both from a user journey perspective, but also adding additional features. We're not just a listing portal. We're literally an ecosystem for developers to come in, look at site acquisition, due diligence through our market intelligence report, also look at feasibility as well. And we also have other features like a data room, a secure online data room where developers can obviously store their documents and look at them through the campaign. So it's a lot more than just a listing portal. It's literally the best way to describe it is an ecosystem around commercial investors and developers.
Yeah, what I like about the extension to the platform with the data room is that in a day where people are wanting information now, our inquiries are we still get their details. We still get their name, number, email address, but they're able to unlock the information and get it on the spot, which is the only portal that does that.
Yeah.
So if you see something and your team's ready and you want to research it straight away, you get the information instantaneously, and we still get all the data that we would get from a general inquiry, but it saves them waiting for us to send it out to them.
Correct.
So that's quite a clever clever aspect, but just talking on the inception of Development Ready, I remember when you first were established, and I thought there was no way a new portal can disrupt such a competitive market, being against the two domain and realestate.com versions of commercial real estate. So competing with two pretty big players. And now I can comfortably, I've actually got a case study here that and I'm sure that people that listen, if you are a developer, you probably utilize Development Ready. But for us, what happens is that Oh, let's go through the statistics first. In the most recent campaign that we've done, the EOI closed yesterday. Property positioned in Mermaid Beach, 2375 Gold Coast Highway. It was a retail centre with a code accessible or a as of right development capability of doing an 8-story development in Mermaid Beach. So quite a highly sought after piece of land. So we had a very strong inquiry rate on that. 215 inquiries over 5 weeks. 23% from Ready Media. We received, by the time it's broadcast, it'll be okay. So we received 10 offers through that process, 4 of them from Development Ready. So Development Ready made up 40% of the competitive tension inside the process, which is ongoing. So I guess the key thing for as a real estate agent is that the quality of inquiries that come from Development Ready, because it is targeted towards developers, whereas the other portals also receive development inquiry, but you get pseudo developers, people that are that may be looking not active developers, or maybe not as established as the ones coming from Development Ready. So without that competitive tension, it makes a massive impact in our campaigns. So the cost per lead that we talk about, when you break it down to cost per offer, it was the most value. It's the best value portal at the moment for development sites, and very competitive in the commercial investment field as well. So it's a key portal for us, and for anybody that doesn't utilize it, much easier user experience than most portals as well.
Thank you for the positive feedback, Adam, and you're absolutely right. I think in addition to sort of like everything you've mentioned, we focus on quality, and we do that by authenticating buyers, and with sort of the mobile phone number being a mandatory field, which is a point of difference to the other portals.
Yeah.
And we also text verify that mobile number. So all the email inquiry that we pass on to the agent has a text verified mobile phone number. The buyer is authenticated, therefore you can pick up the phone and talk to them. Where a lot of others will pass on an email inquiry, as we know, with just a Gmail or a Hotmail, which a lot of times is probably not relevant or genuine.
Yeah, when you're handing out sensitive information, qualifying the leads is important, and you're right. There's inability to qualify leads from a Gmail account with just an acronym as an email address is very hard to determine if they're real or not. So yeah, I mean, we talk cost per lead, cost per offer in this instance. There's obviously a contribution of other marketing elements which made up the other 60%, but feel like I'm working for Development Ready here, but yeah, really, really useful for us. And so we can maybe lean into that, Jake, and have a look at maybe the back end, because that's where I think it's it's interesting when we look at maybe you sent me a statistic during the week that the Gold Coast is now the most inquired region out of all capital cities, which is interesting. And I mean, I don't know if you've got these statistics on you, but is that the inquiry coming locally from interstate? How is the Gold Coast? Who's looking at the Gold Coast now?
Yeah, definitely. So look, the Gold Coast has been the most inquired region in Australia. You're absolutely right, beating out Brisbane, Melbourne, Sydney, and every other major city in 2024. We've got about 40% of these inquiries coming from interstate developers, mainly Melbourne and Sydney.
Yep.
And that also represents a 36% increase on listing volumes for development sites year on year from 2023 to 2024.
Yeah.
Having said that, the inquiry in terms of sort of the increased demand much outstrips supply. So we've got about 40% increase on overall inquiry year on year.
Yes.
So there is increased listings, but also increased demand. And the majority of it, not the majority of it, I suppose 60% is still Queensland, but there is a very, very strong number that is out of state. And obviously, this is averages and overall. It certainly changes when you start looking at, for example, A-grade beachfront apartment sites versus subdivisions, so on and so forth. So yeah, if we actually get into more specific listings and properties, it certainly changes, and you can definitely see the mix change quite quickly.
Yeah, and that's probably attributed from people recognising that there is a supply and demand deficit on the Gold Coast at the moment.
Certainly.
With a need of more product and the challenges we're facing with construction costs, development funding, and just overall market sentiment at the moment. I think that people interstates now are re-identifying the Gold Coast as an opportunistic place to get a footprint. Yeah. And we've also going through a renaissance now of how developers are operating with their building teams and becoming internally integrated. And so we're coming into almost a new chapter in the development on the way that that developers are delivering projects. So
Yeah, agreed. They have to be competitive. I suppose that integration that you mentioned, but I suppose also the Gold Coast region is fueled by the largest sort of price increase out of any other capital city over the last 5 years. I think we had about 80% increase on residential prices on average. So that is absolutely massive, leading the way. So I think this is probably, and there's a flow-on effect to commercial as well, right? Because obviously with the population movement here on the Gold Coast and also these very large strategic infrastructure projects that are going on, that all sort of flows on to the commercial property market.
Yeah,
the different asset classes there.
Typically, you're right. The commercial market will reflect the same sort of growth as the residential market in a delayed wave of price increases, and with population increase comes the demand for services, the demand for industry, and the Gold Coast geographically doesn't actually have too much vacant land in these commercial, industrial, and retail precincts, which means that the vacancy rates across the Gold Coast are dropping, and we've all got all the elements for a strong commercial market coming in, which is why people are identifying us.
Yeah, very much. So I suppose looking at some of the asset classes, if we were to sort of go a little bit further into that, I mean, vacancy on office is sub 5 in many places. Industrial sort of pretty tight as well in sort of the sought after areas. So you're absolutely right, and that obviously drives prices up. Plus, the stock has been quite limited. When we're looking at office, for example, I believe that last year over $5 million sort of transactions were less than 10 all up in the whole year on the Gold Coast, which is probably a record low. So I think that also reflects the vendors, that obviously are holding office stock, unwillingness to put it to market because they're getting such strong rental returns. There's nothing new being built. So obviously that's going to continue to increase. So unless they're selling for an absolute premium price, they're not looking to obviously reposition their portfolio.
Yeah, and I think if you look at 10 years, 10 years ago, they probably struggled with high vacancy rates.
Absolutely.
There was a trend of recutting office blocks or offices into smaller tenancies. Now we've had this growth on the Gold Coast. We've got businesses that need bigger floor plates. We've got no one delivering product, which means that the C and B grade buildings are getting refurbished and brought up to standard. And so, the office market, which was fickle once upon a time, is now one of the strongest markets on the Gold Coast.
Probably one of the strongest in the country in terms of vacancy rates, I think.
Well, we didn't do the work from home environment, we didn't,
correct.
Yeah.
That's right. And that was a big difference for us. We never really had that hybrid model that has continued both in Sydney and in Melbourne. And also, I suppose, with everyone moving up from Sydney and Melbourne, during obviously the last 5 years, they've established new offices, headquarters here on the Gold Coast. National tenants as well are coming in. So it's been, it's actually a really good point because, if we look traditionally and historically, the Gold Coast has been a bit of a boom and bust market.
Yes.
And I feel that over the last 5 years and currently, that's certainly stabilized, and that's not going to be the case going forward.
Yeah, the key to stability in the Gold Coast is key infrastructure projects. I think that construction and tourism are our two biggest industries. Tourism is where you probably, in the past, the waves of tourism created the boom and bust sentiment, but now we've underpinned by a really strong construction market, and we've got so much infrastructure, so many government projects which will take 3, 4, 5 years to complete, that there's no real lull in those particular industries.
Yeah, certainly. As well as the product that's being delivered by developers, if we start talking about apartments, is very different to about 10 years ago. It was more of an investment grade stock back then.
Correct.
Which was easy to sort of offload every time something happened in the stock market, GFC and whatnot.
Yep.
Now you're looking at sort of half and full floors, premium A grade, owner occupiers. So that also is not sort of that volatile in any changes.
Yes, more wealth coming to the Gold Coast is a big one as well.
Yeah.
Because the price points of the product getting built are at a high price point, so no longer targeting first homeowners.
Correct, that's right. I mean, what we see currently is in terms of sort of residential development sites, in terms of popularity, is subdivisions. Large subdivisions are probably the most sought after, all up here in the Gold Coast.
Yeah.
And we've had a really good example with the one that we've run in Upper Coomera for you about 6 months ago. Over 80 inquiries with very, very strong demand. and the other part is A-grade beachfront, small and medium sort of like density apartment sites as well, because that top end of the market is continuing to increase and we're getting some record prices. Therefore, the feasibility is stuck extremely well for that product,
Yes, yep.
as well as subdivisions for the lower risk. Unfortunately, the more affordable, larger apartment sort of like, projects don't stack up really well. And that's why you see quite a few sites being brought back to market where, they were sold in 2022. The developer obviously tried to, make the project work with, funding, construction costs, and, also the DA approval. But a lot of them haven't been able to accomplish that. Therefore, they're putting them back on market right now.
Yeah,
you can see that.
like on a very simple, layman term, they bought the site. We've gone through the efforts, which takes between 1 and 2 years of getting an approval, getting the building approval, getting the project priced up. From the day of contract, the construction costs has superseded the profit margin.
Correct.
And so they're essentially left with a site that they can deliver at no profit, and that's why they're coming back on the market. And it's that's probably relevant to the increase of product coming onto the market. You said that there was a 30% or so increase in products coming onto the market, and those would be recycled sites that need a new scheme, new concepts, because the current schemes on them don't stack up.
You're 100% right. A lot of these properties that are coming to market are not new, as we call them. They're exactly that. They're sort of like, refreshed sites that were sold recently, obviously didn't stack up, and then they're putting them back on the market, along with obviously subdivisions that are becoming increasingly popular. And we can see state government working with different stakeholders around the Gold Coast region, but all over Southeast Queensland, to open up and make more land available.
Yes, and increase that urban footprint, I think, is their main target. So to summarise on the development site, so what we've just determined was that from Development Ready's, from the back end, there's been an increase in supply across the Gold Coast, but that's met and been superseded by the increased demand in terms of inquiry. We're seeing that the highest demand in terms of what type of development sites, the highest demand for subdivisions and for low density, low rise style apartment blocks are where the highest demand is. We've always got a demand for beachfront uninterrupted sites. And so I think where the time of market is starting to span out in development sites is those B and C grade sites, which we discussed have got schemes on that maybe deliver an affordable product which can't be delivered for a profit. Correct. And that's where there needs to be an intervention on how maybe some sort of federal or state policy can come in to incentivize developers to deliver it, because it's that segment of the market that have the demand for product as well.
You're absolutely right. So I think there are only very few developers with strong balance sheets, and they are the integrated builder developers that you mentioned earlier, that potentially can tackle some of those sites. But even there's a lot of risk associated with it. So currently, in this current sort of like, market conditions, I don't think that they're willing to take on too many of these projects, because let's not forget that they're potentially already working on a couple from the last couple of years that they haven't delivered.
Yes.
So you're absolutely correct there that, there needs to be a government, state, council type of intervention in cutting red tape and, giving some incentives to those developers to obviously continue to, deliver that product that is very sought after, and obviously it, contributes to, lower sort of like prices and also rental availability as well.
Yeah.
Being in Sydney, I was in Sydney about a week ago, and BTR is certainly a very, very strong asset class there. There's a lot of products in the pipeline and a lot more that are sort of like, are going to be delivered. But here on the Gold Coast, with the exception of Robina and a couple of other places, we don't really see a lot of that coming to market at all.
Yeah, and it's and I guess from a city's perspective, the danger of that is that with the lack of product being delivered in the affordable market segment means that there's less rentable properties, which means rents go up. And so
that's right.
The flow-on effect from that red tape is significant, and the cost of living increases by having that red tape in place. So I think, you often see people bashing developers online because they're all about profits, and the reality is they have the solution to fulfill the a supply issue, which is going to reduce the cost of even for renters.
Yeah.
And so there should be a driving force to try and overcome these barriers that are currently stopping us from product being delivered.
Definitely. Look, the developers, we work with a lot of developers, and they're one of the most entrepreneurial sort of bunch that you can sort of deal with, and they will absolutely try to find every single possible way to deliver a product to market. But when you've got construction costs going through the roof, you got funding costs going through the roof in the meantime as well, plus a little bit of pressure in terms of, interest rates and sort of prices, meaning that they're not able to obviously pass those costs on and make a margin on these type of projects, then yes, obviously it makes it not feasible being able to deliver something. And I suppose any other sort of businessman or anyone that runs a small or large business will probably empathize with that, because if there's no margin, or if there's a huge risk that you can maybe have a financial loss, you're not going to undertake something.
No.
So it's exactly the same for developers.
Yeah.
No different.
And so then moving to the other commercial asset classes, we mentioned there that there was an increased, one of the strongest asset classes in the commercial market now is, and that's due to low vacancies, as offices.
Correct.
Have you seen any market shifts in the industrial market? Because that historically over the last 2 or 3 years has been our strongest asset class. But I feel from our side that the inquiry has dropped off for industrial properties a little bit, and I think the market that was popular was the man cave style smaller industrial units, which was probably a luxury.
Yep.
And now as the market conditions change, that luxury is no longer as strongly demanded for, and so we're seeing a slower uptake of these products.
You're right, but I think we should also consider the supply side. Over the last couple of years especially, there's been a lot of these projects, all up and down the Gold Coast and, even further up, especially now I see a lot of Brisbane, North Lakes and so on in those areas. There's sort of like small and medium sort of like, man cave industrial sort of like, projects. So there's a lot of demand, there's a lot of supply coming in. The demand, I feel, is still there. It's certainly softened up from like a couple of years ago, especially 2022, for example. But, demand is still there. I think the challenge is that there's a lot more supply. Therefore, that's starting to drive prices down because, buyers do have a lot of choice.
Yeah, that's
where
right.
Before they didn't. So,
that hit the nail on the head, because if you have a look across just the Gold Coast in terms of new products delivered in the 3 asset classes, retail, commercial, industrial, there'd be a handful of retail and in commercial projects that you can probably count on one hand, whereas you need 5 or 6 hands to count the industrial projects. So people gravitated towards that because I think that the construction and funding risks was lower.
Correct.
And the construction process, you have access to far more builders.
Yeah, that's right.
Because it's not a complex build.
Yeah, of course. And look, it always takes a few years, obviously, for, market to catch up, right? So, when developers are sort of like, sitting there in 2022, industrial looks like an all-time high, and, it's not looking like it's stopping anytime soon. You start a project, comes, because of construction delays as well, which have been sort of like, every project that I can think of has been plagued. Like, I don't see anything being delivered on time, anything between 3, 6, 9 months. In that meantime, you sort of like, you have different market conditions as well, a little bit of a softening in demand, and then you've got all that product being ready, readily available, and more coming off the plant. Obviously, it's that supply and demand. It's completely the opposite of what's happening in residential. So, the supply has certainly caught up in industrial, especially in that particular asset class of man caves, and then that's why you can probably see a bit of a lower inquiry on some of the listings out there. But
hit the nail on the head, I think. So I think what's interesting, I mean, we'll go back to in our real estate day-to-day life, we're going in to meet owners and we're discussing the marketing options for their property, and it's an unfortunate part of our industry that a lot of businesses won and lost by low marketing fees, low sales fees, but let's focus on marketing fees, and going in with the perception that you're getting coverage, but you're not. And the reality is, when we talk about these statistics in terms of inquiry, you have a look. We advertise on a particular package on your portals, which is the highest tier, and you need to maybe look at these case studies of the Gold Coast Highway and take out the impact that certain portals have. I mean, without development ready, without that particular package that we had, it accounts to 40% of the offers not being the 40% of the offers on the table, and so that competitive tension, whether it be a 5, 10, maybe more $1,000 investment into the process, in this particular instance, that competitive tension is probably going to apply pressure to increase the price by millions.
You're 100% correct, and this is how we like to always sort of potentially position the marketing packages and advertising spend. It is not. It shouldn't be seen as a cost. It really should be seen as an investment, right? Because they're literally investing in more reach, higher inquiry, better quality inquiry as well, which obviously increases competitive tensions and help you do what you do best, which is obviously negotiate and get a premium price. Otherwise, you're locked into a 4 or 5 week campaign that has 4 or 5 buyers potentially, 1 or 2 not willing to obviously go over a certain price point, and we see that all the time. And then all of a sudden, potentially what you have is hundreds of thousands of dollars, depending on the value of the asset, being lost because an owner chose to make some $10,000 or $15,000 savings up front. So I think there is a direct correlation between the investment up front in the marketing budget and also sort of the results. And we have tons of case studies to obviously prove exactly that point.
Yeah, and I think it's the case studies you need, and you always make yourself available to speak to our developers and our clients as well in terms of what the offering actually delivers, because we don't know all the workings of the back end of the portal, but I think it's important, and it's unfortunately the real estate agents that have that effect is by taking these marketing options out. You are you're really putting yourself at risk because we don't know where that buyer is going to come from. It may not be one of your 4 out of 10 buyers, but are certainly involved with pushing the price up or creating that environment for us to negotiate better. So I thought it'd be interesting. Just a side note, the importance of understanding what metrics you're missing if you don't invest or consider your marketing properly or engage someone that understands where the inquiry is going to come from, which is why it's good to track everything.
Yeah, 100%, Adam. Yeah, that's right. Look, I mean, it's really easy to go out there and obviously give a discount offering. I can understand how it could be attractive to certain owners, right? Who doesn't want to pay less? But I think they really need to understand the risk that comes with it, right? Because again, we're talking about properties, $3, $4, $10 million potentially. So every additional buyer, every bid, that competitive tension that you've mentioned, is usually like in an auction situation, let's just say, because I've seen a lot of those, $10,000 to $20,000 bids, right? So
it's one bid pays your marketing off. Yeah,
more than pays your marketing.
Yeah,
correct. So if you start looking at it like that, and you start sort of potentially making the connection between the marketing efforts up front and that investment with the end result, I think that's a much better way to explain and educate buyers, because and vendors, more importantly, because I appreciate that they're not all marketing experts, right? And that's absolutely fine. But it is, I suppose, our job and your job as an agent to educate and explain what that investment entails and where obviously they're getting the benefit on the premium price of the asset when it sells.
Yeah, 100%. And I think, from your view, in terms of you've come into the marketplace, into Ready Media Group have come in, they have disrupted and created a strong footprint on more the right dialogue, but marketing for commercial properties and development sites across the country. Where do you see the technology of these portals going? I mean, you guys are adapting quickly. Do you see? I don't think. To be honest, I think a lot of your inquiry don't actually go onto your portal but by choice and search properties. I think that you reach them through your marketing efforts. So how are you doing that? How are you doing that for more so commercial ready, the tenant investments, where very similar statistics make up 25% of the inquiry that we receive throughout a campaign. How are you doing that? How are you getting in front of those people?
Yep, of course. Good question. So what we've done is traditionally the mass market portals have what we call a priority listing model that focuses on the suburb, right? So simply put, if somebody's searching for Benoa and you've got a top package, they'll see you on top of the search results and then they'll click to inquire. Now, the challenge with that, especially for investors as well as developers, is that a lot of especially out of area buyers are not familiar with our suburbs, right? So we have flipped the advertising strategy a little bit, and we don't only rely on a buyer knowing the suburb and typing it in. What we do is we've got a quality database, and we connect the investors and developers that have sort of like looked for similar sites over the last 9 to 12 months with new opportunities that come into market.
Yeah.
And the way that we do that, we've got multiple touch points. So we've got the social media team that's retargeting first party data, and without getting too technical, what that really means is that because we have their details, we're able to advertise directly in their feeds. So we don't do it based on interest. We know exactly who we want to target, and that's exactly the audience that we're targeting. We also have obviously their email details. So we send a solo EDM with your property and we put it in front of them. We also, with the development sides, we have a monthly publication, which we print every month and we distribute, and your ads also appear there. And last but not least, obviously, we retarget with Google SEO and SEM. So it is multiple touch points. Every package has bundled social, multiple EDMs, as well as obviously the website listing, which is very different to just having a priority listing on a specific suburb. So with the way that we look at every package is it's either state or national reach, depending obviously on what the agent tells us that it's appropriate for every campaign. Very different to the suburb and region sort of like strategy that both of our competitors have in the mass market portals.
Yeah, I think that's if you just put it on from a consumer's perspective, if they're looking for a tenant and investment, Currumbin, Southport, Coomera, they are looking for different metrics. They're not looking for the suburb. They're looking for lease length, tenant type, and the location, and in terms of what is the exposure like, what is the zoning, what is the future potential for development. And so that's a key problem that's been solved, is that a commercial investment property is not at all suburb-based.
Correct.
Development sites, I agree.
A little bit more.
Yeah. But in the same respect, someone looking for beachfront in Broadbeach is probably a buyer for beachfront in Main Beach.
That's right.
Which wouldn't come up in other portals because they are 10 kilometres apart.
Yeah.
But it's the beachfront element which they were mainly attracted to.
Correct. And also, let's not forget that, if somebody has inquired, let's just say 10 months ago, a developer now that we're talking about for a beachfront site in Main Beach, we will still retarget them with the one that you have in Palm Beach that you just bring into market. Why? Because it's relevant, because that is the flavor of asset and development side that they're obviously interested in.
Yeah.
And because it's a national database, we're helping them by connecting them with the right type of property. So it's almost like a bit of a matchmaking with sort of like, the previous sort of like inquiries and also new listings coming to market. So we're actually helping them and the site acquisition team, instead of having to come back and set alerts and sort of like, look through suburbs every sort of like, a couple of days, they get everything in their emails and also in their social media feeds as well.
Yeah, and it's going to be hyper relevant to them because it's tailored to them based on their searches.
Yep, that's exactly right. And their previous inquiry, more importantly.
Yep. So my newsletter is going to be different to yours newsletter, because if I've been looking at subdivisions, you've been looking at high-rise sites, they'll deliver different products.
100%. Yeah, that solo EDM will be very, very different to what we deliver for them versus someone else.
Yeah. All right. That's, interesting. I think, from our point of view, the marketing is becoming increasingly important in terms of getting inquiry. I think that the market on the Gold Coast, if our target market was specifically Gold Coast only, different, but reaching a national market and reaching a relevant national market is very difficult, because you could spend hundreds of thousands to advertise in every possible advertising medium. Yeah. So having that adaptation to ensure that if someone over the last 9 months has been researching that particular product class, that they get delivered that. And that's probably resulting in the inquiry that we're getting.
That's right. And look, we see right now that in terms of, I suppose, buyer groups, you've got your high net worth private investors that are probably the most active, family offices and whatnot.
Yep.
Followed by sort of, your rates and sort of like, some of these, organizations as well that are looking to buy, and the institutional investors are probably starting to drop off a little bit. They seem to be disposing assets rather than purchasing. In addition to that, there's foreign capital on sort of like, the top end of town that's coming in as well, mainly from US, Canada, and so on. Some large transactions in the Queensland market recently, large format retail and so on. I suppose they're attracted to the Australian market.
Australian dollar.
An Australian dollar as well. That was my next one because of the valuation. And I think you'll continue to see a lot more of that coming in. But they're obviously looking at at the top end of town and more of the institutional assets rather than more of the private stock that we have here on the Gold Coast.
Yeah, and it probably starts from that level and then it filter down to retail level.
Correct. That's right. Yeah, it cascades down.
Yeah,
certainly.
Jake, thanks very much for that insight. I think it's interesting to see what happens on the back end. It's interesting to see that where the inquiry is coming from, there's particular shifts in certain asset classes, and we're a big advocate of Ready Media Group, so we thank you for all the work that you've done and for all the results that you've got us. But certainly interesting to see how people can disrupt. And I think that was the major thing, is how people can disrupt, an industry that had been the same for ever since I've been in real estate. There's no one tried to enter, but you guys did, and it's been nice to watch you guys grow.
Thank you. Thank you for your ongoing support, Adam, and also thank you for your invitation to participate in the podcast series. All the best with the year ahead. I think it's going to be a really, really good year for both yourself, your team, and the Gold Coast market, given obviously all the indications that are coming in. Looking forward to working with you and the team in the future.
Beautiful. All right. Thank you.
Excellent. Thanks.